Hi, I'm Donna Fuscaldo. I'm a senior finance writer with business.com. Today, we're speaking with Ken Alozie, a score mentor, about SBA loans. These are low interest rate loans with flexible terms, and they should be a first stop for small business owners looking for funding. But not everyone will be eligible for an SBA loan. That could be very frustrating. It takes time and a lot of paperwork to get approved. Ken is here to discuss ways to improve your odds of getting an SBA loan if you've been turned down before. Hey, Ken, thanks so much for joining us today.
Hi, Donna. My pleasure. Good to see you.
Great. So, as you know, for small business owners, an SBA loan is the first place to start. Low interest rates, flexible terms, but not everyone gets approved for it. So, is it hard to get a loan? And what happens if you've been turned down?
I don't know that it's difficult. Most people perceive the SBA process, loan process, as difficult, but it is a process. There are things that you have to have in place in order to secure an SBA loan. The process is going to be a little bit different if you're a brand new business or startup um, versus a business that's been around at least 3 years and can report 3 years of operating history. But in general, what they want to see is they want to see that you have strong credit. In this environment, they want to see at least a 700 FICO. They'll ask for, depending on the size of the loan, the last 3 years of company tax returns, individual or personal tax returns. If you're a startup, they'll want to see a business plan. If you're an existing business, they'll want to see maybe an operating plan or a detail of what you need the loan for, an itemized budget, and how this loan will help grow your business. And they'll want to see sources of collateral. So typically, the SBA loan underwriter will ask for what's called a personal financial statement, which details your personal assets like real estate, cash in a bank account, retirement accounts versus your liabilities. So that could be student loans, credit cards, anything like that. It'll also have a line item that'll calculate your net worth. So they'll want to make sure that there's collateral there for the loan that you're applying for. So the collateral requirements are going to be higher for, say, a $3 million loan versus a $50,000 loan. So if you're initially declined for an SBA loan, the first thing you want to do is get some feedback and find out why, so that you can address those issues and either reapply for an SBA loan or pursue a different type of financing.
So it seems like there's a lot of hurdles and the payback is a low interest rate. But I guess
Mhm.
that's why alternative lenders exist. Because why not just say, forget all this, I'm just going to go online and get a quick loan? Why is SBA better?
I don't know if better is the right word. It can be more appropriate for certain businesses. It all depends on what you're prioritizing. Are you prioritizing a lower cost of capital? Are you prioritizing longer amortization? Or do you need the funds immediately? So you're prioritizing speed. Some online lenders can close as quickly as even 48 hours for smaller loans. So if that's important to you, then maybe that's a better option. So you really first have to decide, how much funds you actually need for what purpose, and then decide what's important to you, and then customize your loan search based on that.
So if you went through the whole process, you got all the paperwork together, you did all filled out the application, and you were turned down, can you go back in a few months and apply again? And what should you do in that meantime to increase your chances?
Yeah, it depends on why you were turned down. So if you were turned down because maybe your credit score was just under maybe their threshold. Some banks, if you don't have a minimum FICO, and these are more traditional banks, they cannot work with you in a lot of cases, no matter what the rest of your credit profile looks like. So if it's something like that you can address, then it makes sense to come back. And oftentimes the lender will say, yeah, let's touch base and regroup again. We say that all the time to clients like that. Let's touch base in 3 months or 6 months, depending on what the situation is. If the situation is you don't have enough collateral for the type of loan that you're applying for, reapplying probably won't help. You've got to think about another option. You may need a co-guarantor, someone who's essentially a co-applicant on the loan that might have a stronger net worth profile to apply with you. Or you may need to pursue another type of loan if collateral is the issue. There are unsecured loans out there. The trade-off is they're probably going to be more expensive. So again, it's all about what you prioritize as a business owner.
If you are going the SBA route, how do you figure out, or is there a way to find out all the documentation you need? And if a business plan is part of that and you're a startup, does it have to be comprehensive? Is there help out there to walk you or navigate the whole process?
Yeah, if you don't know where to start, a small business development center like SCORE, they're referred to as SBDCs. They're there in the community to help support small business owners. So you can start there at an organization like SCORE. You can get free mentoring. And so we have mentors who are qualified, who have been through that process before with other clients that can help point you in the right direction.
Great. Does the stimulus, the Paycheck Protection Program, and other SBA disaster relief loans, does that, if you have one of those, does that impact your ability to get a small business loan from the SBA?
In my experience, no, it doesn't. I'm trying to think of a case where it might impact you, but no, it wouldn't preclude you from getting a traditional SBA loan, like a 7A loan.
Does the SBA, are they lending outside of these government pandemic programs? Can you go and get an SBA loan right now?
You can, and one thing that's important to know for a small business owner who's interested in an SBA loan is that the exception being, say, idle. But the SBA doesn't directly make loans. They provide a guarantee program so that a bank that participates, they can package and underwrite a loan according to the SBA's guidelines. And then once they submit that to the SBA, then the SBA provides a certain level of guarantee so that if the borrower defaults on that loan, then the lender is recouped, at least in part, by the SBA. So the first thing you have to do then is, if you're looking for an SBA loan, is to find an SBA lender. So you can search for SBA lenders right on the SBA website, sba.gov. It also may not be a bad idea as a business owner to speak to other business owners in your network who've had experience in getting an SBA loan and get their feel on which lenders may be good to work with in their experience. Also at SCORE, we have some relationships with some SBA lenders, so we can help with that process as well. But that's typically where you'd want to start, is once you determine that you do want an SBA loan, then you've got to find an SBA lender.
And finally, how long does this whole process take? Are we talking weeks, months? When
Yeah,
do you think you'd have funding in your bank account?
you can think of the 7A loan program broadly in as two different programs. So there's the regular 7A, where the loan limit is up to $5 million. So if the loan is above $350,000, up to that $5 million limit, especially if it's on the upper end of that, in this environment, you're looking at probably at least 8 to 10 weeks to get to closing. However, well before then, if your loan is on the right path, then you'll usually get a term sheet within a couple weeks. So that'll provide some insight on terms, maturity, all of that initial information. But if your loan is 350,000 or below, you can apply for what's called an SBA Express loan, which is a subset of the 7A program. Those loans require a little less documentation and they'll move a little bit more quickly. So there you're talking about probably 5 to 6 weeks or so.
What about their microloans? Are they quicker than that, or is it still weeks out?
Usually at least 4 weeks, 4 or 5 weeks. With the microloans, if you're interested in that, and microloans are for loans that are typically between, I'll say $500 and $50,000. You want to reach out to what's called a CDC, or a Community Development Corporation. They can make business loans like a bank, except they're typically not for profit. So they've got a little bit more of a community and impact focus rather than a profit focus. But if you're looking for a microloan, that's a good place to start.
So finally, your top tips for small business owners thinking about taking out an SBA, applying for an SBA loan.
Absolutely. So first of all, read up on the program, the eligibility requirements, how the program works. You don't want to come in blind. You know, a lot of there's a misconception that a lot of lenders are just taking in, there's all this money to give out, and they're hurting for businesses to lend to. With a lot of the banks, that's not the case. Usually they've got a stack of files, and they've got to sift through that to lend to a few of them. So to the extent that you can stand out in any way by having done your homework, by having good documents, being organized, that's going to improve your chances of being approved. So you definitely want to do your homework and understand, first of all, how the SBA loan program works. I can't tell you how many people think that it's actually kind of a grant or not a loan. So definitely do your homework. The second is, and then it's kind of tied to doing your homework. Find out what's entailed in applying for an SBA loan, and make sure those are in pretty good shape before you apply. So starting with your credit, you want to check your credit on your own. Find out what your score is. If it's a little lower than you expected it to be, or lower than where you want, find out why. Typically, a detailed credit report will explain what's bringing up your score and what's bringing down your score. So you definitely want to understand that and address that before you apply for a loan. And typically for an SBA loan, they'll ask for that personal financial statement. So I always tell people, fill it out before you need it so you can get the practice. Because if you submit it to a lender and things are added up wrong, or it's not filled out correctly, some lenders will be a little bit forgiving. But remember, they're not just evaluating your loan or your business, they're also evaluating you as a business person. And you want to come across as competent, like you know what you're doing. And ultimately, the lender is trying to decide, is this someone that I want to work with for the next 10 years? As you know, we manage this loan together and we grow their business together. So you definitely want to come across as a confident, competent business person who's organized and is professional. And which leads me to my next point. When you're meeting with a lender, attorney, you don't have to come in a suit, but come dressed professionally. You know, just because your business is an auto body shop, don't come in your greasy um, um, uniform with oil on it to meet with them. Even if it's a Zoom meeting, at least look professional. You don't have to wear a suit, but remember, you want to project the fact that you're a CEO and a competent CEO. So always remember that when you're interacting with any type of advisor, but especially a lender. And that's really it. If most people did that, I mean, they'd be so ahead of the game.
Great. This was really, really insightful and helpful to our viewers. So I want to thank you so much for taking out the time. I really
My
appreciate it.
pleasure.